Hey, it's Clay at claytrader.com. And in this video, we're going to talk some devils, some very evil things that are oh so tempting, but will get you in a whole lot of pain, a whole lot of struggle, and just annoy you if you don't, if you're not aware of it. And that's the idea here. A little context. I've done this topic before, but as you see here on the screen, it was more of a broad sense. Now, if you want the best user experience, I would say go watch that video. I'll put a link down below and then come back and watch that one. But like I said, that video is more so about the general broad concept of it, more so the theory of it. But in this video, I want to kind of do an unintended part two where I just add a little bit more, not theory, but real life results to it. And I'm going to share with you this little devil that got me. The devil being, of course, you saw from the title, the first minute of the day. And as a recap, as far as the video that you're seeing on the screen, more times than not, probably like 90% of the time, I am not trading the first minute. Now, of course, there's always exceptions to the rule. And, it's a situation where I don't want to ever say to just, you can never, ever do it. But more times than not, you shouldn't be doing it. And this is exactly why, as you're about to see here with some of my real life results. But again, if you want the best user experience, probably go watch that video first. But what we're talking about, what this devil is that first minute of the day. So let me, like I said, no theory here. Let's go to some of my results and you'll see exactly why and how this can be such a tricky time and how it can just cause a whole lot of annoyance and frustration. Now on the screen here, you see the trade that I will be talking about. And this, of course, is the 1 minute time frame, right? And in this situation, I'm showing you right here that I did buy. And I bought during that first minute at $23.98. The reason being, and this was because I get it every now and then, well, Clay, it's not random if you use pre-market. I get it. You can use pre-market data. But again, pre-market and then real time, when the markets are open for, the normal times from 9:30 a.m. Eastern to 4 p.m. Eastern, those are efficient markets. Pre-market, post-market are inefficient markets. Now, I'm not saying that pre-market, post-market, after hours is totally worthless. I'm not saying that at all. There is value there. But those are inefficient markets because not everybody is even able to trade those. And it's not quite the same as when the markets are, open to everybody during those normal hours. So really just to reiterate, I'm not saying pre-market, post-market is worthless. Not saying that at all. But there is a difference. It's apples and oranges. So in this situation, and again, this is not theory, this is me. I was using some data from pre-market, and the data from pre-market was saying, hey, you know what? If this thing can break through 24, so right there, if it can break up through 24, this thing could get moving. So you're going to see my buy point, again, represented by that red line at 23.98. And I did buy during the first minute. So let's see what happened during that first 30 minute. Or excuse me, the first minute, not 30 minutes, the first minute. And you can see right there, check it out. That was looking great. The price came booming out of the gates, went up there and actually hit 24. I anticipated the break by buying at 23.98. And then you can see what happened. In that exact same minute, it was up there at 24. And then that candle closed at 23.68. So just like that, down 30 cents from something that was looking very, very beautiful to then all of a sudden putting me down 30 cents per share. So again, let's look at that next minute. So the next minute of the day, you can see then the price dropped even further and went down as low as 23.22. And at that point, I just had to wave the white flag. I had to say, you know what? I apparently I'm wrong. This thing doesn't want to break 24. It's pulling back. Does this thing want to just continue to pull back, But, from a disciplined trading perspective, you need to manage risk. You need to protect your account, right? Your capital is your lifeblood. That's what's going to keep you in the game, keep you in the business of being a day trader. So you got to protect it. So at this point, I just had to cut the loss. I mean, I got apparently a terrible entry point all the way up there. It was dropping and dropping and dropping. And at this point, well, I don't know. All I can tell right now is that this thing might just want to keep on dropping. So I just needed to cut that loss. So here on the screen, you can see the loss that I ultimately had to take on the trade. NTNX cost me $335 because I just played in that first minute. That little devil lured me in, it suckered me in, and it ultimately smacked me in the face for $335. Now, granted, I did, trade back and ended up closing $24 on the day. But think about that. That first minute pretty much cost me my entire day just because, I had to go. Once you take a loss like that, You get frustrated, so you have to trade with smaller size, and you got to trade very carefully. So it wasn't a situation where I was upset and then tried to just start throwing around huge size. No, I chipped away, and sure, I got green because I had to trade more cautiously. But had I just avoided that first minute, had I avoided that first minute, that little devil, then guess what? That wouldn't have existed. There would have been no loss, and that would have been a much different day. In fact, and here's the crazy part, is that day could, and now full disclosure, full transparency, sure, I'm trading in hindsight here, but I also do have a little bit of additional proof and concept that this could have very well been a real, possibility. But in all actuality, NTNX shouldn't have even been a winning trade or a losing trade. It should have been a good size winning trade. So let me show you what I mean. So let's revisit the chart here a little bit. And let's just say that I had followed what I should have been doing, what I do 90% of the time, unless it's an A++ setup. And this one, it wasn't an A++ setup. It was good. It made sense. It wasn't like random, but it wasn't good in the sense of it was still during that first minute. So had I just, like I said, done what I should have done and sat back, let more context develop, let the first minute form, well, then I would have known, all right, well, the second minute, not much. But then on the third minute here, the chart started to finally, illustrate and show, okay, some things have changed. Again, going back to that first video that I talked about, that maybe you've already watched by now, but I've gotten some context established. Things are no longer as random as they were during that first minute when things can get crazy. So had I just let the chart develop, let the first minute pass by, and then let things take shape, well then, like I said, this is hindsight trading, but I also do have the proof that, yeah, this could have been a very real possibility. So I let the chart play out to this point, and then this is what happened. Now, a little background here. I do offer a private community at claytrader.com. Part of that community is a live chat room. So that is where this is coming from. But as part of that chat room, I alerted members to right here. You can see NTNX 2350, an upside breakpoint. So upside meaning looking like it could go up if it can break through that point. So that was alerted. So that my mindset was on that area. I had acknowledged it. Not only had I acknowledged it, I publicly, alerted it to members of the community. So I was literally laser focused on that level. But again, let's circle back. How did I come about? How did I recognize that level? What gave me the ability to see that? Well, context of the situation. How did I get true context of the situation? By not operating under that first minute of the day, by letting the chart play out a little bit. And when I say a little bit, we're talking about the third 1 minute candle, meaning the market still hadn't even been open 5 minutes. But that first minute, it's such a devil, because if you get enough context and even just a couple more minutes of context, then you can start to formulate much, wiser and much more realistic trade plans. So again, 2350 is what was alerted. And unfortunately, I didn't capture it. I was watching something else. And, I won't vent and rant and rave because always frustrating. But a little spoiler, let me just put it this way. I wish I would have been around and would have noticed that 2350 break when it actually happened. So here is back to the chart, and I have mapped out where that alert was. So I left where I bought just as serve as a reminder. That little devil, that first minute where I bought ultimately cost me money. But then that, secondary alert right here, which is where, like I said, I alerted to the community at 2350. So let's see how everything played out. And you can see right there, that next candle, it did break up through 2350. And from there, you can see, look at that move. Up, up, up it went. A beautiful, beautiful move. And it really just illustrates the rest of the day. I'll go through it quick. You can see, now I'm not saying that me personally, I would have played it perfectly, bought at 2350 and sold the top if only I had been paying attention. No, I'm not implying that, but just to give illustration that this thing, just look at that thing, kept roaring and roaring and roaring all the way up to above $28. Did it even go higher than that? I can't remember. No, it looked like it got stuck right around the $28 mark, but still from 2350 all the way up to over $28. I mean, like I said, I made the alert. I didn't profit from the alert. In fact, I lost money on it. Why? Because that little devil suckered me in during that first minute, and it ultimately cost me, like I said, not only my day, but a whole lot of overall frustration. And that main bit of frustration comes from the fact of I was not able to, like I said, missing it. Okay, that is frustrating. That's super frustrating. But even if this didn't exist, even if that was at a zero, did not exist, then I would have been looking at a good solid, well over $300 day, maybe even more, because like I said, after that trade, I had to go more conservative. I had to tread very carefully because I don't know about you, but for me, when I take losses and losses that are especially frustrating like that, and they're caused by those little day trading devils, then I can tend to just lose it, want to go too big, want to just kind of throw rules out the window. But even with me trading cautiously, like I said, had that been a zero, that's over a $300 day, which would have been fantastic. So like I said, casting aside that this should have actually been a good sized green trade, even if it had just been zero because I avoided, I didn't fall into the temptation, that would have been a much different outcome. But that is why that first minute of the day, I'm not going to say, like I said, should 100% be avoided, but it really better be an A++++ setup, because if it's not, then you can easily get chopped to pieces like this. And I get it in hindsight, Clay, you should have held. You're right, I should have held, but at the time, and unfortunately with trading, we don't have hindsight in our favor, but at the time, I had no idea what was going to go on. And as I mentioned at the start of the video, we need capital as traders, right? If you want to be a day trader long-term, you need capital. So you need to protect your capital, and I just couldn't sit through it anymore. I had to get out the white flag and wave it because it was just becoming too unknown of a situation. Now, if I had a time machine, I would have just kept buying more at that point. I mean, wow, if I would have known it was going to go up. But, obviously we don't have time. At least I don't have a time machine as a trader. So just be aware of that first minute. It is a sneaky devil. It can look tempting. It can look very, very alluring to pull you in. But just give yourself more context, even if it's just a couple more minutes. Now, I realize some people, they don't want to trade for the first 15 minutes, the first 30 minutes. Whatever your context is, that's fine. But I think universally speaking, like I said, just avoid the first minute of the day, especially if you're new and just getting started. I mean, I'm experienced and it's already difficult enough. I just chewed me up and spit me out, and I'm an experienced trader. So especially as a newer beginner trader, I would say definitely make it a rule to just avoid the first minute of the day. Let the chart develop a little bit. And then as you saw here, you can actually get a much better idea of what's going on and put together some wise and very profitable trading plans. Of course, assuming that you don't miss the actual alert or, your trade plan entry point that you map out. But that's the other downside of trading, is sometimes you'll get distracted, and all it takes is for a few moments to get distracted and you can miss something. But that's, that just comes with the territory. But hopefully you found this video helpful. Hopefully, maybe you're already aware of this, but maybe it just offered you a little bit more reinforcement to be very aware of this day trading devil. But that first minute, very, very sneaky, very, very tempting. Just avoid it. If you did find this video helpful, then a couple things. First off, very quick, time-efficient way to communicate that to me. Please just hit that like button. That's, like I said, a very efficient way on your part. Comments, questions, suggestions, leave those down below. If you've ever watched any of my past YouTube videos, then you do know that I read and reply to all comments. And then finally, check out the channel as a whole. There's lots of live trade videos. There's a great variety of videos, other ones like this. And hopefully you like what you see enough to hit that subscribe button, as I'd love to have you as a subscriber to the channel. But overall, beware of those devils, especially this day trading devil. That first minute of the day, so evil, so tempting, but you gotta avoid it. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.